Mackenzie Johnston with Tri-State Livestock News, bringing you discussions concerning fair cattle markets. Today we have the opportunity to speak with Jayson Lusk. He is an economist at Purdue University. To start off with, can you just tell me a little bit about your background?
I'm currently a distinguished professor, head of the Agricultural Economics Department at Purdue University. I've been here in this role about a little over 3 years. And before that, I was on faculty at Oklahoma State. Before that, I was on faculty here. Before that, I was on faculty at Mississippi State. Did my PhD in agricultural economics at Kansas State. Have an undergrad in food science, food technology from Texas Tech. And grew up in the Texas Panhandle. Mainly spent my summers growing up hoeing cotton weeds.
So what do you feel are the major issues standing in the way of fair cattle markets today?
It's a question with a bunch of assumptions. I can tell you what I hear people complain about. And so I think, maybe the way I'd frame it is, what are the things that I hear some cattle producers concerned about in the livestock sector? And in general, I'd say it's things related to, price discovery. I'd say it's issues related to concentration in the packing sector. I sometimes hear people express frustration with the functioning of futures markets. I think during this COVID situation, I think that's put a particular spotlight on, one of the challenges of having a packing sector where we have such a large throughput going through a handful of large plants that, when some of those plants go down, it makes a big dent in national processing capacity. So I think that's one, from my perspective, that we really saw play out over the last several months. I don't think the answers in terms of what to do are easy about it, but I do think, that certainly has been a challenge, no doubt about it, over the last couple of months.
You mentioned packer concentration. What solution do you think is out there that would solve this issue for the cattle industry?
Well, there are always fixes. I think the question that one always has to ask is, what are the costs and benefits of alternatives to our present system look like? So, for example, I think one might argue that if you had a system that was more distributed, so a larger number of more medium-sized plants, for example. Right now, I'm not talking anything about ownership. You could have the same owners and just more plants. I think there would be some that would argue that would be a system more resilient to these, crazy shocks, whether, unanticipated shocks, whether it's a fire or whether it's a pandemic when your workers are sick. I think that's possible. At the same time, I don't think we really know. We don't have good evidence that would be true. And so one of the things that would not concern me, but one of the things I think that's an open question is, what is the labor density in larger versus smaller plants? Because that's really what we're talking about here is your vulnerability to your workers becoming ill from COVID. And if you have as many workers per square foot in a smaller, more medium-sized plant, you're probably just as vulnerable to a shutdown as a larger plant. And I just haven't seen good data on that. So it's not as obvious, although, it's kind of axiomatically true that if you're a smaller plant and you shut down, you don't have the aggregate impacts that happens if you have a big size plant shut down. At the same time, though, what we don't really know is sometimes with that size comes more attention. So we really pay attention when one large plant goes down because it has these big impacts. If you have a bunch of smaller plants go down, it could have a similar size aggregate impact, but it doesn't capture the media attention because it's harder to point the finger when you got so many different things happening at once. I'm just saying there's a lot we don't know. I think those are the questions that I think would be good to do more research on. No doubt we'll probably be doing that in the next couple of years, trying to learn a little bit more about those kinds of things. I think, so one of the solutions to that potential problem is more automation and to try to, lessen some of that reliance on labor.
There has been a lot of talk about more automation within our packing plants. However, they do say that teaching a robot to cut that meat like a human cuts it is darn near impossible. So do you think automation can really come into play?
It's certainly hard, and it's not like putting together car parts or computer parts. Cattle are different shapes, sizes, colors. It's certainly a harder problem. And again, it gets down to costs. I think you can find examples online. There's one that one of my former students who used to work in one of these meat packing plants sent me of a lamb processing facility in New Zealand that was completely automated. So you're talking about an animal that's a smaller shape, could be a little more uniform. It's a little harder to say. And you can see the choices of the packers now to not be more automated suggests the cost of their labor is lower than the cost of all that machinery, or at least their perceived reliability, or at least that's what their calculus was before. But I've also heard, and again, I haven't been in this plant, so I don't know, but one of the newer packing plants on the pork side is in Coldwater, Michigan, and I've heard that it's a much more automated plant than some of the older styled ones. But again, hogs are not cattle. They tend to be more uniform in terms of genetics. So it's possible that it's an easier problem. So I think you're right. It's a hard problem. Is it impossible? No, but it could be really costly.
There's been a lot of talk over the past couple months about increasing negotiated cash trade within our fat cattle markets. Senator Chuck Grassley has brought forward the 5014 legislation to increase negotiated cash trade. What are your thoughts on this legislation and your overall thoughts on increasing negotiated cash trade?
Yeah, so, again, benefits and costs. I think benefits would be that, so many animals are priced on some kind of formula basis. The basis of that formula depends on that cash price. So we want to make sure that those cash prices really reflect market fundamentals. And so one upside would be if you had a more liquid cash market, that you could perhaps be more sure that the trades you're observing are indeed reflective of underlying fundamentals. So I think, that's a positive. What are some of the negatives? I think maybe it's another way of asking a flip kind of question, which is why do we have so many cattle traded not in spot markets? And one answer to that is that there are benefits to coordination in various ways on both sides of the exchange. One is shifting risk from one party to another. And again, this is a benefit on both sides of that trade, that, both that you have a dedicated buyer and you have a dedicated supply. If you're a packer, they tend to make money when they can run close to full capacity. And so they want to make sure they can have enough cattle that they're running. So having contracts that enable them to get a better sense of their supply ahead of time, I think, helps in terms of the efficiency of the system. The other aspect, too, is, so you asked a little bit about my background. When I was working on my dissertation, this would have been the late 90s, at Kansas State, the big concern in the industry was that we'd had declining demand in the beef sector for decades at that point, and a lot of soul-searching, hand-wringing about what to do about that. And there were a lot of attempts to try to address that. And I'm not saying this is the only thing that addressed it, but one of the things we started to see emerging at that time was a lot more grid pricing. So trying to incentivize certain qualities of meat, characteristics of cattle to supply, to differentiate the market, supply consumers more what they wanted. And indeed, again, I'm not saying that's the cause, but it's one of a number of changes that happened alongside, some turnarounds in demand. And we've seen demand decline and stay pretty solid for the last couple of decades. So I guess what I'm saying, so back to the fundamental question is, if you move more towards that cash basis, you lose some of that ability to incentivize certain traits and characteristics through contracts and through various, incentive structures based on those. So again, I don't think there's anybody forcing these outcomes to happen that we see now in terms of the percentage of cattle that are traded in non-cash markets. So, there's something about these alternative marketing arrangements that both producers and packers seem to like. And there's probably some efficiencies and demand gains associated with them. And I think that's one thing to sort of keep in mind here. If just by law, you require more cattle to be marketed in a way they're not now, there's probably a cost associated with that. Somebody's got to pay that cost. It doesn't just go away, and it probably gets pushed both back down to cattle producers to lower prices and then back up to consumers to higher prices. So I think that would be one of the downsides associated with some of that.
Earlier this spring, President Trump made the statement that he would like to cut trade deals where we import cattle. What are your thoughts on imports of cattle and beef?
Well, look, everybody wants to be able to sell our products to foreign consumers, but nobody wants to compete with imports. But you can't really have it both ways. I think the question we got to ask ourselves is, are we better off living in a world where we're trying to trade, both where we're having to compete with foreign producers, but also having access to foreign markets? And my sense is that we're better off in a world where there's more trade. Yes, it invites more competition from abroad, from producers abroad, but at the same time, it opens up markets for us to sell products. And if you look at where we anticipate demand to be growing for beef in the future, it's largely outside this country. So you got to look at countries where population is increasing and where incomes are likely to be increasing, and those drivers again are largely outside of this country. I think I certainly understand the concerns with having to compete with imports of cattle, but I think we've got to realize that in these trade negotiations, it's a multifaceted problem, and if we shut off imports, we may shut off some of our exports. And in general, those exports are pretty valuable to us, even though we do import and export a lot. They're not always the same exact products. We're trying to find markets that have the highest value, and particularly think about variety, meats, and those sorts of things off an animal. We're mainly selling those abroad, so we're adding dollars to a carcass that we wouldn't have had otherwise if we didn't have markets for those. There are benefits and costs associated with it. The challenge is, particularly when you're facing international competition, how do we compete in this country with producers in other countries? We don't have the cheapest labor. We don't have the cheapest land. We don't have the least amount of regulation. And so, at least historically, the way we've been able to compete, I don't know about historically, but in the last several decades, we've been able to compete by being more productive. And so it really puts the onus on us of being very proactive and trying to adopt new technologies, new management practices to make sure we can be more efficient, because otherwise we will be at a disadvantage. And again, even if we cut off cattle imports, if people can produce that meat cheaper abroad, just import the meat. No matter how you cut it, even if you cut out the cattle part of it, we're still in competition with foreign producers, in part because of the imports of export markets.
So you talk about competing with foreign producers. Obviously, our standards here to raise cattle and how they're processed is different than other countries. Clearly, here in America, we raise the highest quality of beef, but yet we aren't able to label our beef. So do you think that's fair across the board, that producers are they're held to a higher standard here in America? However, other product can come into our country and still be sold to the American consumer without them knowing where it's from?
Well, I think the question is, do consumers, I've done a lot of research on this, if you ask consumers on surveys and things if they prefer products that have a U.S. label on it, they'll say yes. Mm-hmm. And even in some of our real money experiments where you can exchange real food and real money, you find a positive premium for U.S. labeled meat products. So I think there is evidence that there's, the consumers have an interest in this. At the same time, when we had mandatory country of origin labeling, it was really hard to see that effect in the data. In fact, the same studies I was just telling you about where we were measuring consumer willingness to pay, those same people that had just put a package of meat in their grocery carts often couldn't tell you where it came from. So they weren't looking on the packaging. The other thing we can't see really in the data, if we kind of analyze grocery store scanner data before, after, during the various changes in mandatory country of origin labeling, you just can't see it in the actual transaction data in terms of consumer demand. So that seems like a little bit of a dichotomy, right? Consumers tell us one thing on the surveys, we're not seeing it in the data. The other dimension here too is, I think for me, this is sort of one of those issues that, to the extent that there is consumer demand for this attribute, and I think there is some, particularly among some consumer segments, what are the barriers that are preventing folks from supplying that market? In other words, when do we want a government mandate that we would require a label versus when do we want the market to figure it out? Segment the market and sell certain products to certain people who are willing to pay for it. And I think, it's just what's not obvious to me is that there are enormous barriers to someone doing this. You had some private companies like Wendy's, they were advertising North American beef for a while, which is not the same thing as U.S., but it does, show that when certain companies felt there was a market incentive to do so, they figured out some mechanism for doing that. I guess the question for me always on the country of origin labeling thing is not whether it's good or bad, should it be mandatory versus voluntary? I think that's the question I've often raised.
The 4 large beef packers are currently under investigation by the Department of Justice. Do you have any thoughts on this investigation?
I think that's what the legal system is for, and I think the various parties will have their day in court, and I am, not involved in that case, even though I probably could have been. I think, I don't want to prejudge the outcome. I have read the complaint, and, the complaint largely focused on the so-called marketing margin, the gap between cattle, what producers pay for cattle and what the wholesale price is or the retail price is. It could be evidence of imperfect competition or market power, but it doesn't have to be. And there are lots of reasons that marketing margins, due to various economic reasons, to things we can't observe, like, packer costs and other issues. I guess what I'm saying is, just without really delving into the data, you can't really tell one way or the other just by looking at margin. But, you can see the graphs that are in the complaint that show that margins have been increasing. Let the courts work it out.
We've seen both our hog and chicken industries become vertically integrated. Do you think that the cattle industry is in danger of going down that same path?
Well, I don't think danger is the right word necessarily. Take the pork industry, for example, the one that's become much more vertically integrated over the last 20 years. And its packing sector had a very similar problem, to the beef packing side, very similar in terms of percentage reductions in processing over roughly the same time period. And while there were certainly hog producers that were significantly harmed economically, a lot of hog producers, because they were basically working under a production contract, were protected from those really adverse price swings. So if you were growing under contract for, one of the packers, you have a rate that you got paid regardless of the fact that the cash price was tanking. And so while it was certainly, stress on those producers to wonder if they were going to have to, euthanize or whatever else, they weren't exposed to some of the market fluctuations that you were if you were, selling into the cash market or what have you. So again, it's all about trade-offs. What you're trading off there in that case in terms of vertical integration is you're trading off presumably some more stability in terms of price expectations against some autonomy. So you don't have the decision-making authority of, when to sell your animals or who to sell them to or those kinds of things. And so, that's sort of the trade-off that exists in that kind of system. The other thing I'll note is, in this part of the country where I live now in Indiana, there's a lot of, contract hog production, and it's a way for producers that are a little smaller, more medium-sized to get in the business. You can take out a loan when you have not guarantee, but when you have a contract on offer, because there's, reasonable, expectation of income that a bank will extend a loan so you can build that feeding facility. And so it's a mechanism for a lot of sort of medium-sized producers to make some extra income that they wouldn't do otherwise, probably. But again, I'm not saying that it's not for everybody.
Yeah, and with the examples you just used, granted, the producers are guaranteed a certain price, but they aren't ever able to get ahead because essentially they don't get paid extra for anything extra they do for their animals. They're the same as Joe Smith down the road. There is no negotiating or competition because the packer is rarely transparent with how these growers are paid. With this situation, aren't we looking at a system where producers basically have no independence?
It's like earning a salary. I work for a university. They pay me a certain amount of money to show up. I do what they tell me. You're right. It's a different kind of job. And there are benefits and costs associated with that. There are times I think to myself, wow, I'd rather just be out running my own consulting firm in business. And then I think about all the risks. And so, again, I think it's trade-offs. And you're right about some of those. You do have negotiating power up until the point you sign that contract, but beforehand, you can choose to participate or not. You can try to, put two packers against each other, try to feed into it. And there are independent hog producers. And actually, a lot of them, too, they don't necessarily grow under contract for a packer. Some of them grow under contracts for various genetics. Companies are integrated from the sow, farrow to finish operations. Their contract may not be with the packer, it may be with the person who's providing their piglets. That's a fairly common arrangement too. But agreed, it's a different business model. And I think, again, the folks around this area, it's not their only operation. They're probably growing corn and soybeans largely in the quote-unquote old-fashioned way. Or, they're trying to find niche markets and grow, different genetics for this company or whatever. And then this is like a side business that provides a source of income that presumably, hopefully, is a little more stable on the side. But you're right. there's not a lot of entrepreneurship in that business insofar as trying to find a new market, trying, new genetics. I haven't really delved into the details of these contracts to see what benefits accrue to gaining production efficiencies. I know there's a lot of controversy in the broiler sector about the tournaments and stuff like that. I don't hear nearly as much of that in the hog sector, but I'm not sure why those differences exist. In some of those cases where they do have these kind of tournaments, there may be some incentives if you find some ways managerially to be more productive. Albeit, in the tournament, it comes at the expense of somebody that's in the tournament.
In the past few years, we've seen a spike in bankruptcies across all of agriculture. What do you see happening to the independent producer and the cattle industry as a whole if some kind of substantial changes aren't made to achieve fair cattle markets?
So there have been some increases in bankruptcies, that's for sure. Still nothing like was, the data that we saw in the 80s, for example. And in large part, that's because land values have still held pretty strong. That's most producers' largest asset. So that's sort of helped stem the tide. You can look at the data, and the trend for decades is increasing farm size in general. It's still the case that 98% of farms are family farms, family-operated farms, but they're just a lot bigger. You also see a lot less labor in those farms, so a lot less people involved in those production systems. And so that's because we're just more productive in various ways. And the other side of that, of course, is people have other opportunities to make money that compare more favorably with farming if you can't be often of a certain size and scale. At the moment, I wouldn't say it doesn't appear that we're on some kind of cusp of some fundamental shift, but I think we're still on those trends. I think it's certainly been a challenging several years in agriculture, really across the board. And that's true whether it be for pork or dairy or corn and soybeans. And in all those cases for slightly different reasons. And it's also the case that, government payments, at least in crop agriculture, have made it a larger proportion of net farm income over the last couple of years. And this year will almost certainly be no different to that. How much of that could be laid at the blame of packers and processors versus just other random stuff? I think my view is it's largely other random stuff. There's not a lot of profit in these processing sectors. They're pretty low margin businesses if you kind of compare them to, if you're an outside like third party investor and you can put money in any sector, it's kind of hard to imagine why you put it in meat processing. On a perhaps more positive note, as you talk about small, this came up when we were talking about the contracting and those kinds of things. Yep. I think there have been and will increasingly, particularly in light of COVID, be opportunities for product differentiation, direct-to-consumer market, some of those kinds of things. It's not easy, it's costly, but I think there's demand for that sort of thing. And if you're going to be a smaller-ish producer, you're probably not going to compete by having the lowest cost product. So you better do something different, have higher quality product, have better relationships, give customers something they can't get otherwise. So you got to compete on those other dimensions. I see some folks doing that and being successful doing that. So there are opportunities out there for folks. I think at the same time that there's some real challenge.
Do you have any other closing statements you'd like to make regarding the cattle markets?
My view, I think kind of the worst of the packer, the processing shutdowns was that really nobody was better off. I mean, it's clear producers were worse off. They're selling fewer cattle at a lot lower prices. So cattle producers were certainly worse off because of the packing plant shutdowns. Mm-hmm. It's also the case that consumers were worse off. They were buying less beef at much higher prices. So, consumers were also a lot worse off. And, what about the packers? That's harder to know because we can't see their costs. But I don't get the sense they were better off. My sense, in talking to some of the folks in that sector was that they wanted to get back in business as soon as they could, too. They were doing everything they could to get back up and running. They were losing money, too, maybe not as much as producers. But so I think when times are tough and something's really bad, we want somebody to blame. And my sense is, who's to blame all this? It's the stupid coronavirus. That's what's to blame. And it's maybe not very satisfying. That's what's caused all this harm to us, and it doesn't make it any easier, but I don't get the sense that somebody was really benefiting at the sake of others. I just see pretty much every sector of that particular beef supply chain suffering some losses, admittedly some more than others.